Let's talk about Bristol-Myers Squibb. This is a giant in the pharma world, and right now, they're in a high-stakes race against the clock. Their entire future is really on the line, and this whole story kicked off with one single surprising number that nobody saw coming. This right here. This is the number that recently sent a shockwave through Wall Street. It's the high end of Bristol-Myers Squibb's revenue forecast for 2026, a figure that was so much higher than anyone predicted, it completely flipped the script on the company. So how in the world did we get here? So where did all this sudden optimism come from? Well, it all started with a surprising surge in performance that put Bristol-Myers, or BMY as we'll call them, right back on the map, after a period where, frankly, there was some serious doubt. It really began with the company's fourth quarter results for 2025. You see, BMY didn't just meet expectations, they blew right past them. They reported higher revenue and, maybe more importantly, higher adjusted earnings per share than all the experts were predicting. This was really the first solid sign that their turnaround strategy was starting to click. But this is what really got investors fired up. When BMY came out with its forecast for 2026, their numbers for both revenue and earnings were way higher than what Wall Street had penciled in. I mean, this wasn't just some small tweak. It was a huge statement of confidence from a company that many people thought was heading for a really rough patch. Okay, so there's all this good news, right? But it's all happening under this huge, dark cloud, a massive challenge that's been looming for years. We're talking about a ticking clock that threatens to derail everything. To really get what's going on, you have to understand this term, the patent cliff. It's basically the boogeyman for every pharmaceutical company. When their exclusive patent on a smash hit drug runs out, cheaper generic versions can flood the market. And when that happens, revenues for that drug can just fall off a cliff almost overnight. And for BMY, this isn't some far-off problem. The danger zone is like right now. Their multi-billion-dollar blood thinner, Eliquis, which they share with Pfizer, is about to lose its key patent protections. This threat is knocking at the door. And just look at what's at stake. It's enormous. A massive piece of BMY's current revenue comes from these older blockbuster drugs, the exact ones that are staring down this patent cliff. So the big question is, how do you replace those billions in sales before they just vanish? All right, so how on earth is BMY going to win this race against time? Well, their strategy is all about building a brand new growth engine, and believe it or not, it's already firing on all cylinders. Their game plan is pretty straightforward, really. It's a two-pronged attack. First, they've got to pour fuel on the fire of their newer drugs, what they call their growth portfolio. And second, at the same time, they have to build a solid bridge over that patent cliff with a deep pipeline of next-generation medicines. And you can see right here, part one of that plan, it's already working. Big time. In the last quarter, while the sales from those legacy drugs went down just like everyone expected, their new growth portfolio surged by an incredible 16%. This is the engine that's powering the company forward right now. And this growth isn't just a one-trick pony. It's being driven by a whole lineup of really innovative drugs. You've got the established cancer powerhouse Opdivo, newer cell therapies like Breyanzi and Abicma, a cardiovascular drug called Camzyos, and even a brand new major player in neuroscience with Cobenfy for schizophrenia. Now, about that bridge to the future, BMY is placing a massive bet on what they're calling their 6 shots on goal. These are 6 potential blockbuster drugs, deep in development, that they believe can become the new foundation for the company over the next decade. Many of these came from some really smart acquisitions, by the way. Okay, so you've got the strategy, you've got the risks. What does all this drama actually mean if you're an investor? Let's break down how the market is looking at this high-stakes game of risk versus reward. Well, even with all this good news, the market is still playing it cool. If you look at its forward price-to-earnings ratio, which is just a common way to see if a stock is cheap or expensive, BMY is trading at a pretty big discount compared to its competitors. What that tells you is the market sees the potential, but it's still baking in the risk of that huge patent cliff. But here's the flip side. For investors who are okay with that risk, there's a pretty nice little carrot being dangled. The company pays out a dividend that yields over 4%, which is really attractive. And what's more, it's easily covered by their earnings, which suggests it's pretty safe for now. You know, this quote from a market analysis just nails it. BMY's story is all about transition, The stock is cheap because the risks are very real, but that also creates a ton of potential upside if, and yeah, it's a big if, that super promising pipeline actually delivers. So, when you boil it all down, this is where we stand. You've got a company with this powerful new growth story that's locked in a head-to-head fight with a very real and very unforgiving deadline. It all comes down to this one single conflict. The plan is in place. The early results look good. But the question remains, can their new drugs and pipeline candidates churn out enough billions in new sales fast enough to fill the massive hole that's about to be created when drugs like Eliquis go generic? And that leaves us with the multi-billion-dollar question. The strategy is in motion, the new growth engine is humming, and the pipeline is loaded with potential. But is Bristol-Myers Squibb actually building a bridge to a bright future, or are they just racing towards the edge of that cliff? The clock is ticking.